Yo, what it do, YouTube? It's your boy MB. Today is March 2nd. It's Saturday, aka the Sabbath day. The markets are closed, so that means I'm showing you the best play of the week. This is the absolute #1 setup you should be taking if you want to make easy money. So to me, easy plays are high quality setups, which I believe lead to a higher probability of working out. These are trades where if you don't trade full time, you can still make decent money on the side. So that's my goal, is to show you what you need to be looking out for, whether you're someone who casually invests, you're a beginner trader, or if you actually trade full time. And then as a reminder, I'm trying to pick out plays that I actually take during the week, but if I missed a good setup, I'll still recap it so we don't miss out on it next time. And this play was the exact same play as last week. It's a perfect supply and demand setup. I've said this before and I'll say this again. Anyone that says technical analysis doesn't work probably doesn't actually trade. And so with all that being said, let me get into the trade. So this chart should look familiar because it was last week's setup. This is a 15-minute chart. You have the all-time highs. We break that. It acts as support. So we ended up taking a long right over here around 68, and then we caught this move to the upside. This was a day that I unfortunately sold a little bit early, but whenever we broke the all-time high, the previous all-time high became a support level. So this was our area of interest. And so, on that day, we created another demand area where we held. So this was a support level. It began to crack here, showed signs of weakness, where it eventually broke down into, and we had a sell-off. And so that's where we lead up into the actual play of this week, which came on Tuesday, the 27th. So here was that previous chart. We had this demand area. We broke below it. It acted as resistance. So this was our supply zone and our target level. So as soon as we entered into this area of demand at 67, where we had the previous all-time high and then the buyers down here, we immediately caught some bids. And so I took a nasty entry at 67.5, and we caught a nice move to the upside. It was targeting this supply area. I ended up selling for about 15 points, and so I didn't hold all the way. But it just goes to show that the market likes to go to where liquidity is. And so another thing that I noticed, and I'll have to pull it up on the screen, is I use Bookmap, and Bookmap just shows you the level 2 where orders are on the screen. So I noticed that there were a lot of orders between 67 and 70. I'll have to post that here on the screen of what that looked like. But I knew that once we got into here, there were just a bunch of orders that were sitting here, orders to buy. And so I wanted to get in front of those, and I had my stop just below all those orders, and you can see that we wicked into this area and we just shot straight up. So it was a nice 20-point plus move to the upside. So now let me break that down, what that looks like if you actually took this trade. So I trade futures with Tradevate. That's the broker that I use. And I trade the ES, which is the S&P 500. And one ES contract costs $500 worth of margin. And every increment that we go up, which is 25 cents, you can see on the right side of the screen, that's an equivalent of $12.50. So if you enter in down here at 50.67 and you hold for 20 points, you make $1,000. And so because this was a supply zone up here at 50.92, if you caught the entire move, it was about a $1,200 move. I ended up taking this play with 2 contracts, and I held for about 10 points, so I made a little over $1,000 on this play. Last week I showed you a breakdown of why it was better to trade futures versus stocks and options, but my Thinkorswim platform's not working, and it took a while to figure out the math. But pretty much all you got to know is that futures is superior. It's easier to trade. You make more money. You don't have to worry about theta and implied volatility killing your contracts. You don't have to worry about strike prices and expiration dates and your trade expiring worthless. It's a lot easier. Trading is definitely, you can say, risky, but you can just control your outcome a lot more with futures. The stop losses are a lot easier to calculate. And so overall, I think it's just a better experience. It's a lot easier. It's, there's no PDT rule. You don't have to have $25,000 to trade. Like I said, all you need is $500, a little over that to cover the commissions, and then also any drawdown you might incur. So $1,000 to $2,000 is a good amount that you can start with trading futures. Maybe I'll make a video in a later date explaining all the benefits of futures, but for now I just really wanted to focus on the best play of the week and show you that it's possible to make money, and yeah, that's pretty much it. So if you have any questions, let me know. Let me know what your best setup was. But I will catch you on Monday. All right, I love you.